Welcome everybody to the Chinchilla Pickin' Podcast. It is September the 22nd, 2024 at 3:17 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only Baron of Bonds himself, Brandon Beaver. Brandon, what is up?
Cowboys play the Ravens, which is why we're going on early today. But
Well, they don't know. They get the podcast on Mondays. And if you're
you know,
following on TikTok, which a lot of people apparently we're not getting followers, but we're getting views now. Thank you. You realize that I cover that on the latest TikTok that we record on Sundays, publish on Mondays, and I was going over some of the things we got right. But yes, we could talk about the Cowboys for a minute if you want to.
well, I don't want to talk about them anymore. Let's wait until they win, and then we can talk more. Um, I
So
no,
next year, then got it.
yeah. So I got a good call, Constellation Energy. Unfortunately, I didn't buy the stock. I thought I was going to, and I wound up not doing it. But yeah,
Well, I mean, you made the correlation exactly right on the last show because you went into data centers and you said, like, I'm probably not going to go in the angle everybody thinks I'm going to go with these data centers. You went into the angle of saying, look, there's going to be companies that make money off of these data centers, and you didn't know exactly which ones, what, where. You listed some names, and you said that these data centers have to be powered, and sure enough, what happened? Constellation Energy, a company that owns a nuclear power plant that's not running right now, is now getting the approval to get it up and running to power a data center.
yeah, yeah. And this is going to be a theme for the next decade: the re-electrification of America and the globe as well, not just for the data centers, but for electric vehicles, for a whole myriad of issues that are going to pop up. We I don't know, it was like a month or so ago. We kind of covered the whole theme of the re-electrification of America. Last week, I just built on that.
I mean, yeah, and it is a theme, and it's something to look at. But I mean, I didn't know. You know, we hadn't. I guess worked those into the prices of some of these companies, and I didn't know that it was going to be worth a 20% jump in Constellation's stock price
Yeah.
for just one power plant going on.
I mean, that's probably overdoing it for right now. But I think that people are probably looking at 10 years ahead, where we're going to be in 10 years. And that's probably why people bought it. It was probably a bunch of long-term investors and maybe a few short-term traders that saw the technicals go higher on it and decided to jump in and momentum trade it.
There you go. I like that explanation better. Yeah, and then I mean, so there's other plays you could go into this. If you have any other names regarding data centers or electrification that you're looking at, Brandon.
Not off the top of my head. No, I do have GE Vernova on my watch list. As I do expect that it'll probably have its first profitable year next year. It may happen this year. I mean, who knows? Their turnaround has been doing a lot better than what even I expected. So GE Vernova's on there. If it decides, if people decide to sell it off, if there's any, recession scares that come back up or anything like that. And then also I want to see, once they are profitable, what does the valuation of the stock look like from there?
Gotcha, gotcha. All right. I want to talk about another quick call that I got right last week. Not just that I got right, that we got right. Was I said Google was going to have a good week and move back up. I still holding Google. I bought Google on Monday morning. Like I said, I would on this podcast. I said I would. I did it. Currently up on it. Very happy with my position so far. I might sell it if I see a reason to sell it, but right now I feel like it's going to continue to move higher. I see a price target for myself on Google about 180,
Okay.
which is I feel realistic for Google to hit, especially with there's some positive tailwind news I believe for Google coming up, especially with the third quarter coming in. I expect higher data center revenue, and then also some more. They're taking some some business away from Microsoft with the Google suites instead of Office suites.
Well, ad revenue should be higher because of politics also.
Yeah, so I mean
So
you have
I don't
that.
know. I bought Google 2.5 years ago, and I still have it. So I don't really have a necessary price target on it in particular. I'm just holding it as it does what I think it will do, which will continue to outperform its peers.
There you go. It's two different ways of trading. Both of us hold Google now. So,
Yeah.
all right, let's get into it. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show for you. Brandon, take it away.
So here's another stock that I think is a buy even after its 6 to 7% jump last week. Nike. I think that Nike is a buy right now. They got a new CEO coming in, down from prior highs by quite a lot. Still, they've been struggling. We discussed the stock on a show a couple months ago, also, where brands like Hoka and a few other of the shoe brands have taken market share away because Nike stopped focusing on its core customer, which was the runner. Um, the you know the marathons and such, like stuff like that Nike used to be a big part of. They for some reason scaled back on that. um Prior to 2020, they started to go a little bit more direct to consumer. During 2020, they pulled a lot of their shoes and a lot of focus away from brick and mortar retailers and went on the internet. And it was good for 2020 during COVID, but after that, it was no longer good because they're not meeting the consumers where the consumers are. Um, this is something that they're going to have to reverse. These are strategic blunders that they're going to have to, turn around and fix and rebuild those relationship with their retailers and their partners and get back to the consumers again. Go ahead, Dave.
I feel like Nike went ahead and tried to follow that whole trend that happened a few years back that started. And it's still going on. I'm not saying it's not still going on, but it really peaked a couple years back, and that was the sneakerhead trend. You had a couple documentaries about sneakerheads and people buying and selling, and you could still go to meetups, what have you, or trades, like a city of XYZ is having a shoe sneaker trade swap. You can still go to those events and trade sneakers, and I think Nike was trying to play off that, and they lost focus, like you said, of the business that helped build Nike, which is the run into athletics, and not the sneakerheads. The sneakerheads are now a part of the business, but you got to also appeal to the other parts that helped you get where you're at.
Well, pardon the pun, but they shot themselves in the shoe on that also because they were focusing on it. They overproduced the Air Jordans and the special releases. Special release is not so special if everybody has it, right?
Right.
If you start going to these sneakerhead conventions and everybody's wearing the same Nike shoe, then all of a sudden they're not valuable anymore. So that's another thing that this CEO Elliot Hill is stating that he's going to reverse. Um, the special releases, they're not going to be as many of them, and they're not going to overproduce them the way that they were because the sneakerheads that were going and buying these up then realized all of a sudden there's no value to them. There's nothing really special about them because everybody has them and they're everywhere. So
Yep.
they have to pull back on production and kind of, refocus on the value end of that because the secondary seller is very important to Nike in that instance. And if somebody's going to go buy these shoes and then realize even the sneaker collector that's not going to sell the shoe, if it's not valuable, then they're not going to care.
Yeah, yeah, exactly. They're not going to want to buy it. There's nothing special about it. I'd go somewhere else.
Yeah. So the new CEO, his name is Elliot Hill. Um, he's known for when he gives speech, he cares so much about Nike that he's teared up in the past talking about Nike and the emotional impact that it's had on him. He
I
started
think he's been crying about the stock price, is what he's
yeah,
been crying about.
probably. Well, he started at Nike in 1988. He was an intern. He handled customer calls and warehouse tasks. He was there for over 30 years. He rose to one of the top of executive roles, but he retired in 2020 after being passed over for CEO. Nike announced Hill's return to lead the company, replacing John Donahue, who is retiring. Phil Knight, Nike's co-founder, led the decision to bring Bill Hill back. Hill's role starts in October. He'll focus on reversing recent strategic mistakes and lead a turnaround here. The challenges, like I said, the challenges here are now industry fragmentation, competition from brands like Hoka and and managing key franchises like the Air Jordan and Dunk, where they're probably going to pull back some of the production on those. He's going to aim to. Here's where I think his strength is going to be. His strength is going to be in rebuilding company culture. Um, and the culture of the company, the morale of the workers has suffered a lot from recent restructurings and strategic errors. His returns already boosted employee morale and, of course, Nike stock price over the week, which was up about 6%. I still think it's buy, like I said. He's known for his warm-hearted nature. He has a deep connection with the employees. He's got a background in kinesiology, which is interesting. And he worked.
Kinesiology.
Here's, yeah, whatever. Okay. Words, whatever. But the most important thing here, Dave, the most important out of all of this is that he worked as an assistant athletic trainer for the Dallas Cowboys.
Well, yeah, that's that means his greatest hits are in the past.
Gotta be
Um,
a winner. He's got to be a winner. He was promoted to president of consumer and marketplace in 2018. He's been involved in initiatives to improve workplace culture and support female employees. The guy that he replaced prior to that, there was an investigation into the guy that he replaced for having a boys culture and sort of like an old old boys club kind of thing going on at Nike. There was an investigation into him. When Hill took over, he implemented a bunch of initiatives to incentivize male employees to be the counterparts and allies of the females that work at Nike. He's constantly said that Nike, what makes him so passionate about the brand is not the actual brand itself. It's not the products, but it's the people that work there. I love hearing that from whoever's going to be the next CEO. His passion is helping people improve, helping people move up in the company, helping people achieve their dreams. That's where you're successful as a CEO, is your people. And if you recognize that, it's going to be a lot easier. So I'm bullish on this. I think Nike is a buy. Price earnings ratio is mediocre right now, about 22, but that's based on the depressed earnings over the past 2 years. I expect that'll probably look a little bit more inviting to investors as Nike starts the turnaround and starts to increase their earnings. I do think that there's going to be a short-term revenue hit as they decide to move away from the strategies over the past couple of years that haven't worked and then change, and move into new strategies. I think that revenue is probably going to take a hit over the next couple of quarters, but I see good significant upside for Nike over the years ahead.
nice. I don't know, man. Nike has to change its image. Like you said, Hoka's really come out of nowhere, out of the back corner there. Other shoe brands are starting to pop up that I'm noticing at gyms and when I'm out running. So it's kind of like, yeah, Nike still makes some decent shoes. They make some good shoes, but I think they're losing some of the actual athletes.
They were,
They're switching
but there's the brand capital, right? And when did Warren Buffett buy Coke?
a long time ago.
The new Coke issue, right? During the new Coke issue in the 1980s, when nobody else would touch it, when they had made a bunch of blunders and when they were starting a turnaround. Nobody else
Gotcha.
wanted to look at it, right?
Yeah.
So this is why I bought General Electric
Okay.
during the same time period. Tried to time it right. I think I did okay on timing it. I didn't get the bottom, but I've
Nope.
done pretty
No one
well.
ever does.
Done pretty
Yeah.
well. I think we're going to see the same thing with Nike here. I like these turnaround plays on big companies.
If you have leadership, and not just one leader, but multiple leaders inside a company that are willing to do the hard work to get the company where it needs to be, then yes.
I really need to hit the mute button when I cough.
But
Yeah,
I mean, go
I think
go ahead.
This guy's going to be the type of CEO that's not going to be afraid to surround himself with people that are smarter than him. And honestly, that makes the best kind of CEO.
Yeah, I mean that makes definitely the best CEO, the person who has everybody around them giving their opinions, and he trusts, and they trust the opinions of the people around them. And you're not always going to agree, but you can come to an agreement on the solution in some way,
Right,
shape, or form.
right.
So no, I'm uh I don't know. I don't know if I'm if you sold me on Nike, you're making me think strongly of it, but
I mean, there's a good chance that we have a bit of a give back on that 6%, bump, but we'll see. I think I'm going to start dipping into this on Monday.
I tell you what, man. I mean, if you want a turnaround, and this is not a long term turnaround. This is a very very short term turnaround. And I wasn't even going to bring this up on the show, so I didn't even tell Brandon about this. Wasn't going to bring it up, but I mean, we're on this turnaround, quote unquote, path right now. Was CrowdStrike? Did you know CrowdStrike did not lose a single customer from that debacle from the summer?
Really?
They didn't lose a single customer. I'm sure they had to create some deals to keep some of them, but not a single one. And with the stock depressed as it was and still is, that actually looks like a buy again.
Okay.
As
I
far
want
as
to
a
know.
turnaround,
I want to know what they did to make sure that's not going to happen again. And I'm sure that's probably going to be a lot of things I don't understand.
I'm sure that the person who went ahead and pushed through that update overnight is no longer with the company.
Yeah, that's true.
But I mean, you live, you learn, you grow, you get better. The fact they didn't lose any customers, man.
Well, who knows though? I mean, that guy that pushed through the update, he will never do that again. Right? So it's a very strong, valuable lesson that he learned. So if there's no other issues that he's had in his past, maybe they kept him on.
That's true. It's true.
Yeah. All right. So with that being said, Nike's return executive to become the CEO is the latest in a long chain of Boomerang executives being brought back to turn around companies that have faltered. Bob Iger to Disney, for example, right? Um, Howard Schultz, Starbucks, Kevin Plank at Under Armour, Sam Altman, OpenAI, Sergio Emerodi at UBS Group, right? And one that we covered here, we covered both Bob Iger and Howard Schultz. I've talked about that. Larry Culp at General Electric, and one of the plays that I had Larry Culp that was very successful. Bob Iger at Disney still yet to be seen. We'll see what happens. I like what they're doing there. But the stock price has not reflected it yet, and we haven't really seen the earnings or revenue growth in the parks department. I like what I'm seeing from streaming right now, though. But go
Well,
ahead.
all right, yeah, yeah. It's talking about that. Like, whatever happened with that Hulu? Did they ever eventually buy out all of Hulu? Did they not buy out all of Hulu? What was the end deal of that?
No, no. So I don't know if anybody else might remember from a prior show that me and you were talking about this.
We were
But
disagreeing about it.
last time we talked about Disney, no, they had not purchased all of Hulu. The plan was to get it done by early this year, but now there's a fight over what the value of Hulu might be. Comcast is saying it's a bit higher. Disney's saying it's a bit lower. Now they've got a third party coming in to appraise the value of Hulu and see who's right or who's wrong, because Disney may wind up owing a little bit more to Comcast to get the rest of that stake.
Gotcha. All right.
So, but in regards to Disney, I don't know if you know this or not, but about 2 weeks ago, there was some data leaked from Disney. In fact, troves of data leaked for Disney that showed revenue and all of the stuff. Revenue from certain areas like Hulu, that's not necessarily reported to the public. It was all good, in my opinion. A lot of it was, at least. I didn't see anything negative out of it. But it's being investigated. But anybody who's thinking about owning Disney or that owns it, I recommend you look it up. But that's not what I wanted to talk about. What I wanted to talk about is that Disney has narrowed It's search for Bob Iger's replacement. They got two guys that they're looking at right now. Um, Leading candidates are Josh D'Amaro, who's the experiences chairman, and Dana Walden, who's the co-chair of Disney Entertainment. Josh D'Amaro, his achievements have been increased revenue in Disney's experiences division through price hikes and new rides, though the experiences division this year has been a little bit faltering. He's frequently seen with Iger. He's at media events, daily communication with Iger. The challenges here is going to be growth in the experiences division has stagnated. Like I said, recent earnings have showed a decline in operating income due to reduced customer demand. I believe that's more because of inflation and people spending on necessities rather than vacations. Um, as well as the fact that right after COVID, we kind of had a boom for vacations, right? The revenge trade was what was happening. We were all going on vacations and spending on experiences that we couldn't for the year prior when COVID was going crazy. Dana Walden, she's been in charge of Disney's streaming business, which recently turned its first quarterly profit. We're looking at potential scrutiny over her friendship with Kamala Harris, which I don't care. I don't care that she's been friends with Kamala Harris since the 1990s. Some people will, some investors might, but it's not going to make a difference to the bottom line. Former Morgan Stanley CEO James Gorman is calling the search for Iger's successor. Is leading the search for Iger's successor. And investors right now seem to be concerned over the fact that Disney's shares have dropped 13% in the past 3 months. Worries about theme park demand and the cost of Comcast stake in Hulu. That's what they're going to be facing. Those are the headwinds they'll be facing when they come into power in 2026, whoever is chosen here. But I think if you're a Disney owner, if you're thinking about buying Disney, management is always very important to me. I think this is something you should be watching out for.
Well, yeah, Disney has some hits and then they have some flops and lately in the box office. Um, Disney parks has been profitable. They're making money.
Mm-hmm.
As far as the numbers I've seen, I haven't seen anything to say otherwise. So I think with overall, I say Disney's not doing too terribly bad. With the subscription services of ESPN Plus, Disney Plus, Hulu, and so forth, I feel like they have a good subscription model.
They do.
I would, but I would like to see the separation, if they will, of people who have Hulu, Hulu Plus, or Hulu Live, or an ESPN Plus, but don't have Disney Plus. I don't want to see the numbers all jumbled together. I
You
want to see the
actually,
separation.
if you look into that data leak, and I think you have to be careful because there's some personal information about data, personal data from Disney's customers that boarded cruise ships and stuff like that. That's not good. But if you look into that release that happened, it actually does break that down.
Oh, nice,
So yeah,
good.
I should
Yeah,
have copied that into my notes for the show. That would have been helpful, right?
that's my question, and that's where the information I would want to know if are they actually growing Disney Plus, or are they growing Hulu? Is Hulu growing, and that's just adding to Disney, because then that means Disney's content's still suffering and not doing well, and it's actually everybody else's content that's doing well. Like
Di-
when they brought Deadpool into Wolverine, I mean into Marvel finally. Now Disney's saying, "Hey, look, we had this great hit." I'm like, "Well, Deadpool had a fan base, and so does Ryan Reynolds has a fan base. You just bought Ryan Reynolds and Deadpool. You didn't create that. That's already been created. The stuff you create sucks."
No, that's not true. I just watched Inside Out. That was good. I mean, granted, it was released
Okay.
10 years ago, but Inside Out 2 is coming out on Wednesday.
Well, it's already been out in theaters. That was a good one. I'm sorry, I was too harsh. Inside Out 2 was a hit. That was a hit for them as well. So I'm just as a Star Wars fan, I was upset with their latest Star Wars TV series haven't been that great.
Gotcha.
So, all right, what else you got?
That's everything on my end.
I knew it. I knew it. We're gonna set a record for quickest episode. Hey, this
I
is
don't
that's
know.
good though.
We go like 20 minutes.
I
I
feel
don't
like
know
this.
where
I
we're at.
feel like we need a shorter episode every now and then. Let's move
Yeah,
in
it's
here.
been 20 minutes because I got a countdown before it cuts us out at 9:08. So
There you
9
go.
minutes and 8 seconds
I,
right now before we get
all right,
cut.
so let's go into some of these. These are my headlines. Brandon's headlines. I read the headline. I say a little bit about it. I get Brandon's quick thought on it, and then we either have a discussion or we don't. All right, here we go. First headline reads: Musk says SpaceX plans to launch about 5 uncrewed starships to Mars in 2 years. This came out in Reuters 17 minutes ago. The quick Reuters article is so short. I'm just going to read the whole thing. You ready? SpaceX plans to launch about 5 uncrewed starships to Mars in 2 years. Chief Executive Officer Elon Musk said in a post on social media platform X on Sunday. If those all land safely, then crewed missions are possible in 4 years, he said, adding that the case of any challenges, the crewed missions will be postponed another 2 years. No matter what happens with landing success, SpaceX will increase the number of spaceships traveling to Mars exponentially with every transit opportunity. Musk mentioned the launch of uncrewed starships to Mars earlier this month in a post on X, saying first starships to Mars will launch in 2 years when the next Earth-Mars transfer window opens. That transfer window, what's the interest rate? I'm just joking. What's your quick thought, Brandon?
Didn't we send the Mars rover there in the 90s? Wasn't that in the 1990s? Or am I...
We still send up a Mars rover every so many years. We don't just send one up and that was it. We've sent up a few. And we as a country, NASA continues to send one up when the other one starts to no longer work properly.
Yeah, we lost the first one, if I remember right.
We've sent a few. Let's just put it that way. We sent a few.
I'm
And the
surprised it's taken this long to do it, and it's no surprise to me that it's a private company that's making these advances.
right, and so quickly too. And the fact that the all the Mars stuff lately, anything we sent to Mars has had a cooler technology group. Here I am mentioning this
Yeah,
awful company again. Has created the battery casings and the battery backups for all these recent ones that we've sent up there. So I wonder if Cooler is going to partner with SpaceX on this and work with them on their landing gears and things they're sending up there.
probably.
Don't know. Don't know. I just found that was interesting. Came out real quick. Wanted to add into the show. Quick headline. This one, though, you do know a lot about this company. It is TSMC, or it's Taiwan Semiconductor. Taiwan Semiconductor, because Brandon's done multiple episodes on Taiwan Semiconductor, so I know he knows a lot about the company.
Mhm.
So TSMC and Samsung discuss building Middle Eastern mega factories. TSMC and Samsung Electronics, those if you're listening right now, those are the two biggest chip makers in the world. The biggest in the world have discussed building huge factory complexes, like more than one, in the UAE or United Arab Emirates that could transform the chip industry in the coming years. Potential chip projects in UAE could be worth more than $100 billion.
Perfect. Keep doing it. Let's keep using allies, not like people that are kind of friends and then enemies. And then, let's go and develop in those areas. I wonder what the cost of building that's going to be because UAE is a very rich country.
Well, they said $100 billion. But here's the thing is that they have right now in Taiwan, they have to ship in sand from China.
Yeah.
If you're building in UAE, you got tons of sand right next door.
Yeah,
You just
that's
go out to
true.
your backyard and pull
Yeah.
up the sand.
Yeah.
So I that could be a motivation. And yes, a more stable Middle Eastern country, UAE, could be a good position for Taiwan and Samsung to grow into.
Most likely a higher cost of doing business, but obviously they see, positives in it. Otherwise, they wouldn't be doing it.
Right? I agree. All right, cool. All right, third one. I know you don't follow commodities, and I usually bring the commodity news on the show, so here it goes. This came out.
Hold on. I want to hear this. I want to hear this, but I'm going to start looking more at commodities now that the interest rates are being cut because that's going to actually drive the price of oil up, or it should.
Well, surprisingly, it's not oil that I'm talking about this week.
Okay. All right.
This article came out on Friday at 5:54 p.m. on the Reuters Newswires. The headline reads, Grains, Chicago corn soybeans dip on big expected yields. So corn yields are expected to be large. Brazil's soybean harvest is not expected to be hurt by dry weather like they thought. Wheat is having some dry weather concerns. That's why the cost of wheat jumped up last week, but corn and soybean dipped down. So Chicago corn futures ticked down. Soybean futures hovered near unchanged on Friday with seasonal harvest pressure on the rise. What we're looking at, the most active corn contract on the Chicago Board of Trade settled down 4 cents at $4.01 to 3/4 a bushel. For the week, it fell 1.81% for the week. However, soybeans, I mean, they're saying that they're having a big harvest, but they actually had a weekly rise of 0.57 per week. Wheat contracts rose 3% at the end of the week, but they were down earlier in the week, but they're expecting it to go up the price. Currently, wheat's at $5.68 per bushel. They're expecting that price to go up because there's a concern about dryness in the Black Sea, the U.S. Southern Plains, and Argentina with wheat, and they're not getting the big wheat yields that they were expecting. Soybean prices did draw some support from weekly U.S. export sales that came in above trade expectations on Thursday, according to traders, but they were also pressured by the beginning of the harvest with expectations of large supply. So, supply versus demand. The sales were coming in strong, and then all of a sudden the news came out that, hey, we're going to have a huge harvest, and then the price started to drop. That's what this article is talking about. The USDA also confirmed private sales of 121,000 metric tons of U.S. soybeans to China, and that's for delivery in 2024-2025 marketing year. I'm going to go on here in a second, but I want to get your first thoughts, Brandon.
So who do we buy? What do we buy? Do we buy soybeans over this or?
So I'm not buying soybeans. I expect that price to go down because of the big yields, and corn to go down because of those big yields. Wheat was down last week, and I expect that to go back up because now the news is coming out that they are not going to have big yields. So if you're going to buy any contracts, you're going to buy wheat contracts, and you're going to buy them because you're going to expect that price to go up per bushel.
Okay. We've had a small drought here in Ohio over the past couple of weeks. Yesterday, we had a higher temperature and a lower humidity than Phoenix. It's not
Really?
not a normal thing. Yeah, my grass is like dying right now. Very dry here in Ohio.
Yeah, it's
That's
very dry, very hot. It's not usually this hot. Usually, we get at the beginning of September, you get a couple days in the 90s, but then it usually dips down, and it goes between the 70s and 80s, and then October hits and it stays in 70s and below.
At 93 degrees in the middle of September is ridiculous.
Yeah, it's
Absolutely.
hot. But even with that, we're seeing these big, huge U.S. yields of corn and soybeans. I bet the people who bought those soybean contracts for the U.S.-China trade is upset that they paid such a high price, knowing that the price was going to start dropping at the end of the week.
Yeah.
They're like, we just waited 2 days.
Yeah.
Could have got a better price. Basically, what it is, and here's the quote from the article, corn yields are just very impressive. In commodities, it's really basically a lot of supply versus demand, so huge supply coming in, thus demand going lower. That's all I got on that article there. Any other thoughts on the corn and soybean market, Brandon?
I'm surprised because Ohio is a big corn market here. We sell a lot of corn, we grow a lot of corn, and it's just been so super dry in September.
I would like to say that Nebraska would like to say, hey, we kind of grow a lot of corn too. We have a football team called the Corn Huskers. I think they would like to get their voice heard too.
Yeah, it's everywhere, right? That's true.
All right. So talking about commodities goes into my last little article here, and this is more of a quote from BlackRock over this past week that came across on CNBC. I know you don't like CNBC personally. I do. I like watching these news and listen to their interviews with CEOs, hearing quotes like I'm about to give you from BlackRock. BlackRock came out and this past week and they bought up a lot of Bitcoin and they're going to continue buying Bitcoin because they have a doubt about the US dollar still being used as all commodities. And their backup is to buy Bitcoin. And this was a BlackRock executive making this quote.
Cool. We'll take him for his word, I guess. I'm just
Well,
saying, you don't know why he's saying it. You don't know why he's saying they're going to buy more. Maybe he's saying they're going to buy more Bitcoin just so that other people buy more Bitcoin. Maybe that's his real reason.
I mean, okay, I give you that. I give you because they do that. These investment banks, investment firms, hedge funds, they all do that. They do manipulate the news networks. But this also goes into the fact that, what would you do? Because this has been talked about for the past 2 years now. What would you do if we stopped having everything being based off a US dollar? What would replace it?
Bitcoin.
Would we go to the yen? Would we go to the
No,
euro?
no, no.
You
It'd probably be Bitcoin. Well, maybe. I don't know.
I mean, if we enter
Or
a
gold.
war, if you enter a war, right? A country gets dismantled or multiple countries get dismantled, what's going to happen if you believe in World War III or something like that's going to happen?
Well, then you
The
go to a
currencies
barter. You're going to go to a barter system at least temporarily, and it's probably going to be gold, maybe Bitcoin, but probably be gold.
my point is Bitcoin, right?
Right.
Bitcoin, because that doesn't matter about if you're buying it in rubles or if you're buying it in euros or you're buying it in dollars. You're buying Bitcoin, and I could take this Bitcoin over to Russia and pay for things, or I could take this Bitcoin over to Europe, pay for things. I can take this Bitcoin over to China and pay for things. It becomes now the default de facto currency of the world, and I believe that's the point this BlackRock executive was making.
Gotcha.
But yes, he could be just saying that in order to drive the price of Bitcoin higher.
Why'd they name it BlackRock?
I don't know, but when you have over $10 trillion worth of cash that you use to buy and sell companies, I think it's like 15 trillion right now. That you can name it whatever you want, man.
Yeah, I don't know. They both BlackRock and Blackstone. It sounds like a villainous company off of a, you know, zombie movie like Resident Evil.
Look, I
It's a
don't
sweet
agree.
name, don't get me
Yeah,
wrong, but you sound like villains.
yeah, and sometimes they act like villains too. So, um, all right. So final thought, Brandon, go ahead.
You know, the Federal Reserve cut by 50 basis points. I thought it was going to be 25. I was wrong. It's 50. And I'm starting to wonder if that's going to signal to investors, hey, let's go into some of these luxury stocks that have been beaten down. Maybe LVMH or, some of those stocks that have been hit pretty hard that still have decent balance sheets start to come back a little bit. I'm keeping them on my watch list.
All right,
I'm
good
watching
thought.
them. I want to see what happens here. I think LVMH would be my top choice.
You know
Or
what? And I
RH, LVMH, RH. I made a play on RH a year ago. I was not successful on that. Lost a little bit of money, I think. I was either flat or lost money on it. But LVMH or RH, those are the kind of companies that I'm kind of looking at right now, and I'm thinking about at least.
gotcha. I got the 50% the 50 basis point percent rise wrong. I was thinking 25 was the shoe in, 50 was a no go. Man, did I ever get that wrong. I think they're moving very, very fast here, but I just have to hope and pray that they have information I don't have, and that's what's making them drive this.
Yeah, but we also want it to be good information that we don't have. We don't want them to be panicking and saying, "Oh gosh, here comes a big recession, and we need to speed this up."
Well, I believe what they, yeah, that was one concern. They tried to, the public announcement was that they want to rebalance the line to where it should be, to where we're making moves that actually can make a difference. Right now, the interest rate line's too high. We need to bring it back down so we can actually do some things with it.
Well, anybody that's looking for a house right now, you either need the interest rates to come down or the prices to come down. It doesn't make any financial sense at all for anybody to go out and purchase a house right now. So if they're
Or you
looking
can
at
have
that issue,
sellers have a land contract. If a
yeah,
seller wants to do a land contract, then you don't really have any interest rate if you and the seller don't agree on one.
yeah, but the price is still really high. Something's got to happen.
Anyways, Intel, the rumor came out that Qualcomm was looking to buy Intel. Qualcomm has not confirmed this. Intel's been struggled and hit by lots of struggles this year as they lost market share. They lost deals. They were meant to have a $50 billion plant built in Ohio. That deal went away and got lost. Intel has just been losing deal after deal. A couple of years back, I was thinking that they were going to do well because they had all these deals they were inking, but then I quickly got out as soon as I became profitable because I realized that they're losing these deals and they're losing market share. So it's Intel's been beat up, but a 10% jump in the stock price is probably something that would make Qualcomm not want to buy it because they only want to buy if it's cheap.
Intel fumbled the handoff on the Ohio factory. I mean, they were getting subsidies. This was going to be a good deal for them, and I don't know what happened.
That's neither here nor there. I think that 10% jump was too much for on Friday based off the rumors of Qualcomm buying it. I would wait for to come back down, and then I would want some verification from Qualcomm if you're going to buy off of a merger, a buy, sell, what have you. Brandon and I've covered this many times on the show. I first want to hear from Qualcomm saying that they're buying it before I would buy in.
Yeah, you don't that's not the kind of speculation that you want to be a part of. You might as well be on DraftKings.
Right. But as far as going into this week coming up, just same thing. I'm holding Google. I got all my other holds. I'm looking good. Coney is doing well for me. I like the ETFs. Still playing that just fine. So everything's going well. I'm very happy where I'm at. All right. Thanks for listening. Hit the subscribe button, hit the follow, tell your friends and family all about us. We appreciate it. We appreciate all of you. DM us when you have questions. As always, we hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.